What is the role of evidence in investing? This is an interesting question I came across today. The role of evidence in science. The role of evidence in science is it is the thing to be explained, according to David Deutsch. I want to discuss the role of evidence in investing. This is the Not Even Wrong podcast. It's November 17, 2020. This is Krim Delco. For the day, the fund is up 20%. The market was up 18 basis points. For the year, we are up 379.8%, so 380%. The market's up 14.5%. We're outperforming by 365.5%. If you put $100 in Orange Capital Partners on January 1st, 2020, you would have $480 today. And the same on the S&P 500 would have yielded $114.5. The role of evidence in science is that is the thing to be explained. I think the word is explicanda, I'm not quite sure, but it doesn't matter. In plain English, Deutsch says the thing to be explained. That is what evidence is. So you throw a ball from the Tower of Pisa, it falls down on Earth, you try to explain why that happens, you come up with the theory of gravity. You do a double slit experiment, you see that electrons follow a certain pattern that you observe, you try to come up with a theory, you come up with multiverse theory, you come up with quantum mechanics, etc. So what is the role of evidence in investing? Well, you could argue the same way. It's the thing to be explained. So you find an explanation to explain, to make sense of what you just saw. I think there are a couple of things with investing that I want to caveat here. First and foremost, it's the problem of overconfidence, which is exactly the situation that Kahneman and Tversky pointed out in their seminal papers about overconfidence, which is that often in investing, instead of explaining what we see, we have the explanation and we just look for evidence to support the evidence, to support the explanation. This is overconfidence, and of course this is very dangerous. So you have, let's say, people are short Tesla and they look for evidence to support that short. They find that the sales in Norway are down 30% this quarter. Completely out of context evidence. It is evidence, it's a fact, but it's certainly not evidence relevant to the investment process. So I think we have to caveat evidence in investing, and I think it applies to science also. What is actually relevant evidence? Or, Mr. Deutsch, how do you answer the question, well, what is worth explaining? So you need an explanation for that. And this is the problem. I think this, like everything in life, everything in science and in investing, we are in a circle of reference here. We are in a Douglas Hofstadter type of world. We are in a Gödel-Escher-Bach world. We are in a Gödel world where we can't really come down to the bottom of the truth of the thing because we're trying to explain something from within the system. I think this is the second incompleteness theorem of Gödel. So what can we do here? You see, what is worth explaining, what is evidence already requires an explanation. And then I can explain what I see. So what does that really mean? Let's use the scientific example and then let's go back to investing. So in science, is it worth explaining why an apple falls down from the Tower of Pisa? Well, yes, that's certainly worth explaining. Why? Well, because first and foremost, it helps us build bridges, it helps us build houses, it helps us develop gravity, it helps us build airplanes. The Newton mechanics, which are based on Galileo's explanation for why this apple fell from the Tower of Pisa, I believe it was the Tower of Pisa, some tower in Italy in the 16th century, I believe, or 17th century. So that was the base of Newtonian mechanics, and that helped us do a lot of things. Now, some people might say, well, who cares? You're just an instrumentalist here. You're telling me that the value of science is just to build stuff. So science is enslaved to engineering. Well, yes and no. I would say that to some extent, we could just reduce everything to that. But I think more importantly, there is also the search for truth. Because of Galileo, we got to Newton. Because of Newton, we got to Planck. Because of Planck, we got to quantum mechanics, Schrödinger. And we're going to go further. We got to Deutsch, and we're going to go further. So it's a step-by-step process. We have to figure out stuff, and therefore we need to use evidence to find explanations that might be irrelevant after a while. But the point is, what do we use as evidence? For example, is let's take something in science, like is the fact that we can measure things in space, we can measure things in particle physics, bosons, I don't know, we can measure a lot of things, we can gather evidence and then try to find explanations. And the question is, why are we even doing that? Or how do we even decide what kind of evidence we're looking for? We have to build technology to find evidence for things. So we need to first have an explanation for what we're even looking for, and then have the evidence so we can explain what we're seeing. So I think there is, like I said, a circular reference here. In science, though, I think this is what people call basic science, or in generally, the scientific community would defend its process by saying, look, let us just do things. Let us look for this type of evidence. Maybe a lot of times it's useless, but sometimes we hit the jackpot, and this is how we progress. And we see it all the time in fields such as biology and microbiology and medicine and physics and engineering and material science. Supposedly irrelevant evidence can yield to explanations which can have a massive impact, particularly on the lives of people and on engineering. Now let's get to investing. Investing has the problem of overconfidence, where you create evidence to support your explanation. So you start with an explanation and then create evidence. And this is a very human factor. Investing is a bunch of humans sharing ideas and putting money to play. And I think I want to distinguish here between the investor that we typically find in the markets, the sort of general investor, particularly the Wall Street type investor, which in my view is not the kind of investor most people actually think about when they talk about investing, meaning these people don't have skin in the game. Nassim Taleb talks about this a lot. Skin in the game means you don't really care about making money. What you want is be right. You want to be accomplished as somebody who has good ideas, good explanations. So a lot of investors, particularly on Wall Street, analysts, also buy-side managers, they are much more concerned about having right ideas than actually making money. And I would say that also applies to venture capital, because you have this typical bragging about, oh, I invested early here, I invested early there. They never talk about their losses. So anyway, long story short, I want to exclude this type of investing and just focus on those types of investors which have this genuine goal of being right, finding the truth, finding the true wealth creators. I would consider ourselves to be in that category. And this is also the name of the podcast, Not Even Wrong. In order to be wrong, you have to earn the right to be wrong. You have to build a theory, you have to build a thesis. You have to have a consistent explanation for the kind of evidence that you're looking for, and then have this circular reference back to the explanation and find better explanations and use this Popperian process to actually get to a better place. We believe, like I said in many episodes before, that investing, like any other process in this new modern world that we have since the Enlightenment, it is not about the right thing. It's about replacing bad ideas with better ideas. This is what our process of investing is. And in that context, the question, what is the purpose of evidence in that context? Well, it is to find better explanations. It's as simple as that. We look for evidence to improve our explanations for what we're doing. The purpose of Orange Capital Partners is to invest in fundamentally new concepts and new engineering practices with large impact. In fact, it is to generate wealth by investing in fundamentally new concepts and engineering practices with large impact. So this is the purpose. We need an explanation for why we put money to work in A and not B. The explanation has to be cross-checked with evidence. The purpose of evidence in our process is the same exact purpose that evidence has in the science world, and this is to explain. So if we think that a fundamentally new concept, an engineering practice, has the potential to have a large impact and generate wealth, we need to explain that. And the evidence is, for example, we have a new battery technology. That is evidence. There is a new battery technology which allows for a 250 miles range, 300 miles range. We have a car with a better performance than the competing ICE car. We have 3 milestones that Tesla is setting: convenience, lower price, and cash flow. This is evidence. This is a fact. It is written in shareholder letters by Elon Musk. It is also shown in the earnings statements of Tesla. So we have evidence that supports our explanation that Tesla is a fundamentally new concept with a new engineering practice with a large impact. If we find evidence that contradicts our explanation, we have to work harder. We invested in GoPro a couple of years ago. The explanation was that there is a fundamentally new concept, which is to have a camera, an eye version of a camera, and that GoPro will become the funnel, the eye of the new social media video-driven world. Our explanation was that video will dominate social media, and that GoPro, because they own this last piece, the last mile, if you want, or the last inch, more precisely, that is a fundamentally new concept and also a new engineering practice, which is to build a camera which is very robust, etc., etc. The evidence didn't show that. They could not sell as many cameras as we thought, and they could also not support their software business as we thought. And the reason they couldn't do that is the explanation for the evidence that helped us find the explanation was that Apple was a much better competitor than we thought. So we realized there was a mistake, and we closed the investment. We invested in Twitter because we thought that Twitter will use artificial intelligence and particularly word processing to the next level and become the world's leading advertising company. We were wrong because Twitter was not very good at using machine learning, in particular natural language processing, for anything, even for their own service. So again, the evidence showed that our explanation was wrong. I think in order to make money in the markets the way we want to make money, that in order to generate wealth, I said this many times, you have only one degree of freedom. You have to choose in which company you invest in. This is your only degree of freedom. Once you find the right company, you have no more discretion, because you're not going to sell. You're just going to keep growing your wealth with the company that is generating the wealth. The big question, of course, is find that company. And for that, you have to have this Popperian process of explanation, evidence, explanation, evidence, until you find it. And what that means is that the first day we invested in Tesla was not the day when we put all our money in Tesla, because we weren't sure. We had to find an explanation, refine the explanation. We're still in that process. Now we're at the point where I think our explanation is very hard to vary, which is another definition of David Deutsch, or the way David Deutsch talks about good explanation. They're hard to vary. It is very hard to vary. You can, of course, you can find flaws in the explanation that Tesla will become a wealth-generating large company with fundamentally new concepts and engineering practices. You can find reasons why that might not work, but it's very hard to vary. It's very difficult. You have to, for example, you have to think that competition will catch up. You have to think that demand will change. It's possible, and maybe one day it will happen, but I don't think it's practical to think like that. So we have very good explanations for why Tesla is a wealth-generating company using fundamentally new concepts and engineering practices with large impact. So to summarize, the purpose of evidence in financial markets is the same like in science. It is the thing to be explained. We, as investors, have to be very careful not to fall to the victim to the overconfidence fallacy, where we engineer evidence so we support our explanation that's already been formulated. So there's a very important distinction between explaining evidence and explaining what evidence to look for. These are two different things. We need to explain both. What is the evidence we're looking for? Do we care about the sales in Norway in a particular quarter? Is that evidence that is important for our explanation for why Tesla is a wealth generator? Well, sometimes it could be, sometimes it could not be. This is the difficulty of investing. But I think overall, we concluded in some of the last episodes that there's a fundamental milestone, which is convenience, lower price, and cash flow. As long as Tesla follows those three vectors relentlessly, and uses the fundamentally new concepts and engineering practices to drive those three vectors, we believe that all the evidence supporting that process is good evidence and supporting our explanation. If we find evidence that contradicts those vectors, if we find evidence that Tesla is not going for more convenience, the Tesla is not going for lower price, or the Tesla is not going for cash flow long term. Of course, in 1 quarter or 2, they could have lower cash flow, but that's not the point. If we find evidence that those three vectors are not being pursued, then we would have to change our explanation and potentially exit the investment. Thank you.